Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. We saw risk assets all start higher on the day. Disney higher, finished up 8%. ISM non-manufacturing, much better than expected. ADP payrolls, though, came in lower than expected. Was at 167,000. They're looking for 1.5 million jobs created. We still have non-farm payroll on Friday. That's going to be the big number. We look to the Bank of England tomorrow. Weekly jobless claims after that, 7:30 a.m. Central Time. Dallas Fed President Kaplan talks, 9 a.m. Central Time. We came in today, though. Again, Disney higher. The data was okay. ISM non-manufacturing, though, that was a strong number. But coming into the day, Washington was still in the balance. Are they going to be able to get a deal together and able to help push these unemployment benefits on? President Trump, though, is talking about an executive order if they cannot come together. So the market's expecting something here, and they always typically do by the final minute come together. So very, very interesting in the last 2 days here before Friday, which is sort of a deadline. Keep an eye on that. U.S.-China trade tensions also something to really keep a very close eye on right here. We do not think the market is pricing that in at all. U.S. sending a representative, the highest level representative to Taiwan to talk. Now, that's going to start rising some tensions as well. TikTok's still in the mix, so a lot to look out there in U.S. and China as the week winds down. But overall, again, Disney leading the way. We saw a lot of the stocks today that haven't joined this tech rally to really such a great degree. Those were the ones that performed today. The Russell 2000 up huge today. Let's take a look at the heat map for the S&P 500. First, take a look at those financials. You got the financials were all up very strong. Yeah, Amazon had a good day. Disney had a good day, but industrials, those all led the way too. Again, these are some of the performers today that haven't performed with tech all year long. And those big names, Apple, Microsoft, Facebook, Google, they really sat the session out. And some of the others, the Cisco, Verizon, Intel, all down on the day. So keep an eye on how things develop. So tomorrow, the NASDAQ did hit some good resistance, 11,187. That's a range extension from last week's high on Thursday, Friday, down to that low. And then so that range duplicated itself. And it really stayed contained. The NASDAQ finished about unchanged on the day. Let's hop into the S&P chart. It did come into this big major gap. 33.39 was the close. This is a daily chart from February 21st. Now, this gap is really when the pandemic started hurting the U.S. stock market. Remember that ISM non-manufacturing back in February for January's number also got the ball rolling here. So some damage in this chart. And one thing that I think is extremely interesting, look at this chart. Now, this chart, I've mapped it out to really just be the entire year. All the volume on this entire year is right in this region. I mean, even on the sell-off, you didn't get this type of volume here. So all this volume is really up through here. The damage, the liquidation. Yeah, we've seen some big trading here. It's a big trading here that's also put the volume. But this is a big area in the S&P 500 right now. So keep that in mind. Let's move on to the Russell 2000. Big high today. It did take out that June high here, but also has not taken out this March 3rd high. Keep that in mind, 1548. Today's high, 1544.5. So watch this, a little bit of resistance there. Strong move. I mean, it really is just finishing up there on the highs. And, it signals it's going to try and see what's up there a little bit. But again, strong resistance there in the S&P. Good, decent resistance there in the NASDAQ. The next thing that I really want to point out, too, is the NASDAQ. It's not accelerating. It's not just getting that windfall buying out above new all-time highs. It's hanging out above there, but not accelerating out above there. So that's something to really keep an eye on, too. And the NASDAQ, does this move have legs? That's the question. So moving on to the 10-year, I want to really point out again, the 10-year note, new low in the yield, lowest level since March 9th yesterday. That yield came back in just a bit here today, but you see here, new low, took out that April low, and it's the lowest level since March 9th. Now, you're seeing yields go lower. That does not signal risk on. So who's right here? Is the Treasury's right? Is the stocks right? Maybe they're both right, and they're just saying Fed liquidity is not going anywhere. Keep that in mind. Dallas Fed President Kaplan talking tomorrow, so keep that in mind as well. But we're watching the ZB, the 30-year bond, very closely. This is the daily chart. Let me pull up here this 30-minute chart, though. And what I really want to show you is this inverse head and shoulders. I've talked about it a couple times. Inverse head and shoulders on the 30-minute. this neckline. It's come back, tested this neckline, held it, rallied really great yesterday. Very disappointing session here today. Still holding this neckline area. We like the trade. Really thought with that lower low in the 10-year yield, we're going to see this break out here, especially with this nice setup. And then we were to get above that 183 level, which has been a very difficult level ever since the 30-year bond made that move on March 9th. A very difficult level, 183 for it to get out above. We still like it, very constructive, just nice up channel here. But keep that in mind, 183, we really need to get out above there. The groundwork is laid, but a lot to go on still this week. Bank of England tomorrow morning, weekly jobless claims, and the non-farm payroll on Friday. So keep all of that in mind as the week develops. Trade balance out of China early Friday morning too, so as well. So crude oil, moving on to that, 200-day moving average, the September contract ran right into that here today on the highs, slipped back. It did get out above this gap. This is the first time we really saw it trade out above the gap for September. The front month gap was been achieved on various contracts, but this one, September, just really hasn't been able to trade through it. Still did not close out above it, so keep that in mind. Failed breakout so far. A lot of strength behind it. Failed breakout so far. Lastly, really taking a look at gold here. Want to keep in mind that gold is hitting $2,000. This is a 30-minute chart. This is when gold hit $2,000. Gold really holding very well out above it. So I wanted to see, this is our thought process of some of the next resistance levels. This is from the 27th, ran up 2,000, this big sharp move back, stabilized. This range extension, 2070, 2075, that's our major 3-star resistance. 100% move on this range extension. So be some resistance here. Keep in mind, so what I'm watching is 54 bar moving average on a 30-minute chart and 110 bar moving average on a 30-minute chart, and seeing how they react. Overall, staying above here is very healthy. Good support in here. But as you see, this really hasn't been able to cross through that. So watch, if kind of a little bit of a head fake there, didn't really stay and dive through it. Watch for that. That could be a signal that the top is going to be in for at least a very short period of time. We think gold has higher to go, and we really do think this move is going to have legs. Silver too, some legs, but it's extended quite a bit already. We're due to see a little bit of a breather. So I mean, in this elevation, you just got to manage risk and see how this plays out. Know your spots to the downside. Give us a call though. We're here. We're here to help. 312-278-0500. Remember though, futures trading involves substantial risk of loss and is not suitable for all investors.